Welcome to this month's To The Point, where we break down real estate information county by county so you can stay informed.
And this time we're changing things up. So we're not just going to throw numbers at you. We're going to start big picture and then zoom in to each local county.
And of course, we'll hear from our favorite bow tie economist, Elliot Eisenberg. Because what's a market update without hearing from Elliot?
Welcome to this month's To The Point Market Update, where we compare how each county performed against the overall Northern Nevada market and how they changed from January to February. This report includes single-family homes and condo townhomes in Washoe, Carson City, Churchill County, and Douglas counties, while Lyon County also includes manufactured homes. As always, these figures are as of March 6th, 2025, and may adjust throughout the month. The median sales price for Northern Nevada rose 1.8% month over month, reaching $509,000, and is 4.9% higher than last year. Closed sales climbed 10.4% from January, totaling 635 transactions, while median days on market fell 41.9% to 25 days, indicating stronger buyer activity. While new listings declined 4.5% from last month, they remain 9.8% higher than this time last year, and active inventory sits at 1,774 homes, down slightly but still 17.9% higher than last year. With these regional trends in mind, let's see how each county compares. In Carson City, rising sales and slowing market pace. Carson City's median home price fell 4.6% to $524,925, a bigger drop than the 1.8% regional increase, and also down 2.8% year over year. Closed sales surged by 26.5%, more than doubling the 10.4% regional gain, showing buyers were highly active in the area. However, some homes took longer to sell, with median days to contract at 29 days, above the regional median of 25 days, though it's 18.6% faster than January. The takeaway, Carson saw a strong increase in sales, but slower price growth and longer days on market compared to the rest of the region. Churchill County had stable pricing and a fast-moving market. Churchill's median sales price rose 1.1% to $380,000, which lags behind the 1.8% regional increase, but is still up 16.2% year over year. Closed sales climbed 21.4%, slightly trailing the 10.4% regional increase. The biggest improvement? Days to contract dropped to just 20 days, making it one of the fastest moving markets in the region, down 66.1% from January. The takeaways, Churchill's price has remained stable, sales rose steadily, and homes move much faster than last month. Douglas County, biggest sales jump, but slower moving inventory. Douglas County had the biggest sales surge in the region, with closed sales up 59.4%, far exceeding the 10.4% regional gain. However, median sale price fell 6.1% to $688,020, much steeper than the 1.8% regional increase, making Douglas one of the weaker counties in terms of price stability. The days to contract improved 48.5% to 35 days, but homes are still sitting longer than the 25-day regional median. The takeaway, Douglas saw the biggest jump in sales, but continues to face price pressure and longer market times. Lyon County, including manufactured homes, saw strong price growth and slower sales. Lyon County's median home price climbed 4.5% to $402,500, outperforming the 1.8% regional increase, and is also 7.3% higher than last year. However, closed sales fell 4%, making it the only county with a drop in sales, while the regional market grew 10.4%. Homes sold faster than in January, with median days to contract down 26.7%, though at 32 days, Lyon homes are still moving slower than the 25-day regional median. The takeaway, Lyon County had the strongest price growth, but was the only county where sales declined. Homes are selling faster than last month, but still taking longer than the regional average. Washoe County saw steady growth, aligning with regional trends. Washoe's median sales price rose 1.9% to $535,000, slightly above the 1.8% regional increase, and is also 5.6% higher than last year. Closed sales increased 7.8%, just below the 10.4% regional rise, showing steady demand. Homes sold quickly, with median days to contract down 40%, now matching the 25-day regional median. The takeaway, Washoe County closely mirrors the regional market: steady price growth, moderate sales gains, and home selling right in line with the market pace. So what's the takeaway about the February market? Carson City saw a big jump in sales, but also longer days on market. Churchill homes moved at record speed, while Douglas had the biggest increase in closed sales despite price drops. Lyon had the strongest price growth, but was the only county with declining sales, while Washoe tracked closely with the regional market trend. Everyone's wondering about tariffs and the impact they can and will have on the industry. To break it down, let's turn it over to our favorite bowtie economist, Elliot Eisenberg, to discuss how tariffs could affect housing supply and construction trends in the coming months.
That's a great question. There are a number of consequences, I think all of which are bad. The first one, the obvious one, is that all the imported goods in a new house are going to get more expensive. That's primarily gypsum, primarily from $500 million, mostly from Mexico, about $8 billion in lumber, mostly from Canada, and then tiles and sort of bathroom fixtures from China. But it gets worse than that. And this is because all domestic producers of products upon which tariffs have been imposed, they will raise their prices. So it becomes all the gypsum in a new home, all the lumber in a new home, and all the tiling and fixtures, bathroom fixtures and so on in a new home that gets more expensive. That's going to raise the price of a new home by easily $15,000. And that will certainly cause production of new homes to come down a little bit because people can't afford to buy the house. As a result of that, some people who were looking to buy a new house are now going to look to buy an existing house. And that's going to raise the price of existing houses to some extent as well. So at the end of the day, what you have is new and existing home prices rising and less supply of houses in total because new home production has declined. Not exactly what we want to see when we have a shortage and an affordability problem.
Thanks for the update, Elliot. If you'd like to get more information from Dr. Elliot Eisenberg, you can scan the code on your screen and get his updates. And we'll see you next month.